Hey everyone, credit cards are at an all-time high. However, we've got good news. So is home equity. And we are going to sit down and tell you a little bit about a product that we have that will allow you to get access to that equity in a streamlined and fast manner. Let's get started. All right, Clark Alexander, VP of Sales, Pure Funding, Gary Pierce, one of the co-founders here, out of the Texas office. Clark's out of California, doing a lot of HELOCs.
Doing a lot of HELOCs.
Doing a lot of HELOCs. It's a cool product, been around a long time, but here recently it's been, kind of coming to the forefront of our business anyways. A lot of people talking about it.
What's our pipeline? Like half of our pipeline is equity?
Yeah, half is probably either cash out or home equity loans right now.
Yeah. So
yeah, it's definitely a topic of discussion. And look, I'm not a sky is falling kind of guy with credit card debt and all that stuff, but it's reality. However, I would say more than 50% of that pipeline is using it for, home improvement projects, buying investment properties, things like that. So I'm not going to sit here and try to fear bait people into, trying to get a home equity loan because they've got a credit card debt, right? But it's an option. So, hey, let's get into it. Let's talk a little bit about Clark. I want to dive into just really understanding, like, give us a high level of how do you get access to your equity in your house?
Yeah, I'd say, like we talked about, it's the majority of business we're seeing right now. People need cash, right? They want cash either for home improvement, debt consolidation. The nice thing about the HELOCs that we're working on right now is they are brain dead simple to get through. It's not a full application. It's not a full credit check. They use an AVM to get the value of your property. It's a limited application, so it's not like going in and getting what I remember when I got my first home equity is sitting in a bank like, holy smokes, like this is like getting the mortgage all over again, and I'm just asking for equity that's really my equity. So the good news is we have a couple partners, one that we're focusing on today that you went out and signed, I don't know, probably a month or so ago, and whenever we do that, we're like, okay, they're all selling us that like this is the best thing since sliced bread. So we've got to get some reps with them to see if the experience is what they're selling. I can say it is. So we've had some people go through and close within 5 days. We've had people sign complete the form. I've completed the form. They've completed the form and been approved for way more than they expected inside of 2 hours. So it's
for sure.
The game has changed dramatically. And I will say that if you are looking to gain access, this is not going to be a process that you're like, oh, why did I get into this? It's quick. It's easy. Yeah.
Hey, quick disclaimer on that part of it, because our Texas folks that are listening, by law, we can't close in 5 days. There's a 12-day disclosure that is required to be a wet signature of both parties. If there is a marriage situation, both parties have to wet sign, and then that disclosure has to season for 12 days. So the fastest you're going to close is probably going to be about 12 to 14 days. But any other state, is fair game. Like it can be 5 days. Texas is, we always have our own little twist on things.
It's normally us in California. Like it's one of the few times where Texas coming in saying, no, we have more regulation. No, California is the regulation capital of America.
Yeah. Well, when it comes to,
we can drive fast and take chances for once here. Like we can let's go. We can
turn it loose,
get some people some help.
Yeah. So let's get into the terms a little bit, and also if you'll stick around to the end, we'll post a video, a previous video on cash out refinances, which is a little bit different than this. So stick around to the end, grab that video. Make sure you're hitting the subscribe button for further videos. You'll get notified when we do put out more content. But check out that cash out refinance, because there are two different products,
Yep.
to be clear. So let's talk about terms of the HELOC product specifically.
Mm-hmm.
So how does that look?
Yeah. So basically, it is a 5-year draw period. So you sign up for the loan, you have 5 years to access that cash. There will be, and customers see this pretty early on, a initial draw requirement of 75%. All right, let's talk about what that means. So if you're getting $100,000 equity out of your house, that means your initial draw, the initial amount of money that's going to show up in your bank account, is going to be $75,000. Now, you can turn around and repay that immediately. There's no prepay penalty on this. So you're not sitting on $75,000 outstanding. It is a requirement of the lender that you have to take 75%, but you can pay that back, or pay back 50% because you only needed a certain amount, and then your first month payment will be, the interest on that 75%, and then the second month will be whatever you've held on to, whatever you haven't paid back. It'll just be interest on that. Then at the end of the 5-year period, it's amortized over 25 years. So that's the payback period. So very straightforward, very common. And I think the nice thing here is there's no prepayment penalty. So if you're, thinking, I don't want to sit on a second mortgage or a HELOC or anything of that nature for too long, you can pay it off. It's no harm. They're happy to do it. So that's the basic fundamentals of how the program works. I would say in the first handful of times we went through it, that was the first kind of wait, I got to take 75%. Yeah. Some of lenders we work with are even 100%, but you can pay it back immediately, no prepayment penalty. So just hold on to what you need, and the rest is there when you need it over that 5 years.
Got it. Okay. So as far as if somebody's thinking about their max, and let's just use a round number. Let's say I've got a $1 million property and I owe 400,000 on it. What's the max amount of money I can take in the form of a HELOC or the line?
Yeah, so they will look at what's called CLTV, and if you didn't see our acronym video, we probably should add this one to the list.
Yeah, we'll add it.
Basically, add it. Just keep adding it. There's probably 300 more we could add. So they look at combined loan to value, right? So you have your first mortgage. Let's say it's $1 million home. You have $500,000 remaining on your mortgage, and you want to add $100,000 home equity loan. Now you're 600,000 against. So they look at that, and then that, based on your credit score, is going to determine where your rate falls. And they're very transparent on the rates, so we can get a read on rates very easily. So, and I will say the majority of people that have come in saying, "Hey, I need X amount," they will tell you, the lender will tell you, "Hey, you're actually approved up to this amount. You don't have to take it, but it's there if you want it." So it's really based on credit. And where you fall, where your first mortgage falls, and how much you're going to need of that equity that's remaining in the property. So we get an understanding of that pretty quick in our early discussions. And I mean, literally, it's 10 pieces of information you got to tell them. What's the remainder of your loan amount? How much do you need? Social Security, birthday, things of that nature, income. But it's not a hard credit check. It's a soft pull. So they really don't have any roadblocks up for you to move fast.
So I think the speed is really the thing that kind of blows me away. Talk about the appraisal process and why and how that works.
Yeah. So as long as the AVM is comfortable with the AVM being automated value. Add that to the acronym video.
Yeah, we'll add
AVM. Basically, what Zillow says is the best way to put it. It would be a system like CoreLogic or Zillow in the back end, and they put in the address, they get the value of the property, and then they have an understanding of what the outstanding loan is on the first lien, and they make a decision on how much of that equity that's in the property they're willing to give you access to. And I think you'll be surprised how much they're willing to give you.
Yeah. And I did, because I kind of went blank too. Automated valuation model.
There it is. Model. The M was catching me.
Yeah.
Like methodology, metric. It could have been a lot of things, but add that
Just
to the
makes it
list
easier.
of acronyms.
And you don't have to have somebody come out to your house and
yeah, it's,
take pictures and all that funky stuff.
Literally, I would say like the initial call I get from customers after reviewing their offer is like, hey, this happened really fast. Like what's going on here? We expected a lengthy process.
Yeah.
Having to have an inspector come, like all the things that they're accustomed to, and getting their original mortgage, just they don't exist here.
Yeah, no, it's good. I mean, I think if you look at industries across the board, this is where the real estate financial side has taken technology and data. I think one thing, what are your thoughts on unique properties? So if you're in a subdivision, kind of the normal subdivision track homes, that's pretty much a no-brainer, right? Like from an AVM standpoint.
Yeah, I mean the AVM basically looks at other comps, right? Other comps. Now, if we had this wasn't this was more of a buy before you sell, but in that instance, they're trying to determine the equity in the property as well. We had one in; it was a custom home built in a development, and there just wasn't a lot of comps, so they need appraiser to come out. That is rare. I mean, that's 1 out of 10. I think that AVM hasn't been able to come up with the comps necessary to determine the equity that they're willing to give. So it's rare. If you've built this very unique property in a development that doesn't match the others, and there's not a lot of sales transaction to go from, they're probably going to need to. We've yet to see it on doing a HELOC.
Yeah. You start seeing the red flags is possibly in our area on places with a lot of acreage, things like that. So just if you got any questions about your property, we can take a look at it and kind of say, hey, this could work, or this is probably not going to qualify this property. And then we would have to, at that point, start thinking about maybe like a cash out refi or even a HE loan, which is different than the HELOC. And we'll talk about that in another video.
Yeah, and the nice thing about this, like I mentioned, they're doing a soft pull. So you're going to get your offer. You're going to have everything in front of you. You don't have to take it. It's there. You can look at it and be like, wow, that's, you're going to know the rate. You're going to know everything you need to know about it. And
the credit's a cool thing, right? So the credit, they're doing a soft credit pull all the way up until the time you accept the offer and you're like, hey, I'm moving forward. So it's not on like the mortgage side where we have to pull your credit and do a hard pull. You can take a look at this, see if this math makes sense for you in your situation, and then you make the decision, right?
Yeah.
Like if the deal works.
It's literally, and I will say the support team and the level of service. I mean, it is white glove. I mean, it really, I'm used to being the quarterback in the deal, and like I've got to make sure I'm touching base with the customer. They know everything going on. This team is phenomenal. They are
their ops team's great.
They get customer success. Like it's unusual for us. Just traditional lenders tend to operate the same way they have for a long time. These guys are a technology first platform. They get it. They know that customer success is vital to their model. And I will say that, I mean, the reviews we're getting back is like, I had no idea I could do this so fast and have the support I needed along the way, literally a phone call or email away. And the response times are great.
Yeah. I love that. I mean, that's like one of the key components to our business, regardless of the loan type, is that level of customer service. Always, providing access, answering your phone, answering your emails in a timely manner. And so that's when we look at investors, we need that, and that's what we want. That's what we expect. So it's a really nice addition to the portfolio of loans that we offer. So I think if you're in the market, I think you at least need to look at it. If you're considering doing a home improvement project, or if you're considering even paying off that, high interest credit card debt, it's a good way to do it. Very low barrier to entry. It's a really good product. Definitely check it out. Clark, thanks for hopping on.
Absolutely.
If you have questions out there, want to kick around some ideas, run the numbers, we're happy to help. Give us a shout. Do us a big favor. Hit that subscribe button. Helps our channel. We'll continue to make the videos and provide good content. And we look forward to seeing you on the next one.
Thanks, everyone.
See ya.